Please subscribe, like, and comment.
You're looking to get past the noise, right? Cut through the headlines and really understand what's going on, and fast. Today, we're diving deep into President Trump's recent tariffs and how they're hitting the Bitcoin and crypto markets. We've pulled together reports from, the big financial names, Bloomberg, Wall Street Journal, plus crypto sites like CoinDesk, and some expert takes too. Our mission, just distill the key insights, the different angles on how these tariffs are affecting crypto without getting bogged down in jargon.
Exactly. You want the bottom line. And there's definitely been some significant movement since the announcement. So, yeah, let's break it down.
Let's do it. So first things first, what really jumped out from the sources was the immediate market reaction. Pretty clear cut. On April 3rd, right after the news, Bitcoin's price. Well, it took a noticeable dip, falling below $82,000.
A definite reaction.
And it wasn't just Bitcoin. Stocks tied to crypto, like Strategy, formerly MicroStrategy and Coinbase, they also saw pretty big drops, over 7% for both.
Right. It looked like a classic risk-off move. Investors getting nervous.
Risk-off, meaning they're pulling back from things seen as, riskier.
Exactly. When there's economic uncertainty, like with new tariffs, investors often shift money out of assets like crypto and tech stocks, things seen as more volatile, and maybe into safer havens. That seems to be what happened here.
Okay, that makes sense. Now, beyond just the price charts, this is where it gets kind of tangible. These tariffs seem to be messing with the actual nuts and bolts of the Bitcoin network, the miners.
Yeah, that's a huge piece of this.
Turns out a lot of the specialized computers, the mining hardware they need, it's made in countries that are now subject to these tariffs. So what's the immediate fallout from that?
Well, the direct hit is higher costs. That essential mining gear just got more expensive for anyone buying it in the U.S. Simple as that. The tariffs added tax.
So U.S. miners are suddenly paying more for the same machines.
Precisely. And we're already hearing reports, sources saying U.S.-based miners are scrambling, trying to speed up their hardware imports before the full impact really bites.
Trying to beat the clock, essentially.
Kind of, yeah. And looking down the road, the worry is this could lead to actual shortages of mining hardware and definitely increase the day-to-day costs, the operational expenses for these mining companies.
So it's not just investor sentiment. It's hitting the actual infrastructure. Okay. Now, shifting gears a bit, looking longer term, we found some really contrasting views in the analysis. There's this pretty interesting argument that these tariffs, maybe paradoxically, could end up weakening the U.S. dollar's dominance in global trade.
That's the bullish case for Bitcoin, potentially.
Right. And the idea is that this could actually create an opening for Bitcoin and maybe other cryptos to step up as alternative assets. Zach Pandl from Grayscale, he's their head of research, put it quite directly. He said, tariffs will weaken the dominant role of the dollar and create space for competitors, including Bitcoin. What's the logic there?
The thinking goes like this. If tariffs make the U.S. a, let's say, less predictable or more expensive trading partner, other countries might start looking for alternatives to the dollar for international trade and reserves. And that creates a potential vacuum. Decentralized assets like Bitcoin, which aren't tied to any one country's policies, could theoretically become more attractive as a kind of neutral alternative for settling global transactions or holding value.
Interesting. A potential unintended consequence boosting Bitcoin. But naturally, there's another side to this coin, right? A more bearish outlook.
Of course. There always is. The counterargument is that these prolonged trade disputes and just the general economic uncertainty they create could actually lead to more volatility in the crypto market, not less.
Okay, so why would that be bad long term? More volatility. Isn't crypto known for that anyway?
It is, but the concern is about sustained instability driven by these broader economic issues. That kind of environment could spook the bigger players, the institutional investors, pension funds, endowments, large corporations.
The big money.
Exactly.
Yeah.
They generally prefer more stable, predictable markets. If crypto looks too choppy because of global trade wars, they might just stay on the sidelines or pull back. And that could really slow down crypto's wider adoption and overall growth.
So it could hinder mainstream acceptance.
That's the fear, yes. Less institutional capital flowing in.
Okay, so let's just try and wrap this up for everyone. What we've seen is an immediate price drop for Bitcoin and related stocks, a sort of knee-jerk reaction. Then there are these very real disruptions hitting Bitcoin miners, making their essential hardware more expensive.
Definitely. Supply chain issues.
And looking ahead, it's really a split decision among the experts. On one hand, maybe this weakens the dollar, potentially boosting Bitcoin. On the other, maybe the economic uncertainty just creates too much volatility and scares off big investors.
That sums it up well. The immediate effects, the costs for miners, are quite clear. The longer-term path, much more debated. It really depends on how these global trade tensions play out and how markets adapt.
Right. So as you process all this, the market swings, the minor issues, these two very different potential futures, maybe think about this. What does it really show us about how connected everything is? Global trade policy impacting a digital asset like Bitcoin. And maybe more importantly, what other unexpected turns, what other global factors might be out there ready to influence Bitcoin's journey in ways we haven't even considered yet? Something to think about.
Please subscribe, like, and comment.